bellwether Netflix 390 put on the opening bell. Let us mind you that they closed at 55.7. Now, here is a 1 minute chart on the opening bell of that super gap. We went right up here. We can see in the background over here that Netflix went up. We also have the 395 puts on the super gap opening bell price. They close at 55.82. They're taking more premium out of the 390 by far. When you take a look at these gap down wholesale prices right here, 1590 on the 385, 1590 on the 385. Okay, here's the 385 put on this opening bell. This is about the first 1 minute price print. Volume 5, 3, and Volume 1. Okay, I'm being told by an MMT. What did you say? Right. So here we have a reversal right here on this candle on that opening bell. And then we're going to find out in the next 15 minutes to 30 minutes to 45 minutes and 1 hour incomplete is how they steal the premium out of this market and how we can buy it based on this having an intraday reversal where the wholesale entry will come into play on the super gap of the morning after on Netflix on this opening bell at 6:32 a.m. Pacific Standard Time. Date is 10/22 of 2013. Now, my traders and my worldwide friends, let me tell you something. These are wholesale prices from the previous day's close before Netflix came out and announced their earnings. Look at the big dollar mathematical gap down. Look at the equity sell off. We're going to let it show where that high is and where we continue to come down here and how these premiums are going up in value right now. You can see the bid ask on a 385, 390. So let's go like this. So now they're in order. And we clearly have 5015 over here on the 385. Those bids were lower. One contract has made a low of 1590 and a high of 1660. And the volume is totally 6. So clearly, as Netflix reverses, and it's the morning after the earnings, and we're going to do our due diligence and let the prices be proven with this big markdown in this area. How the markdown is tradable on that opening bell in the option pit. 2060 is a low. They're 22.95 by that's a 395 put. So when we hit the high up here and we reversed, that was a low of 2060, 22.95 by 23.90 bid and ask. Now you got to be a seller up on that side of the market. This is how you trade that resistance level. That's coming right out of the gate and gunslinging the entry at these wholesale bids. What I will say is the following, and it's very important that we do one thing only, and that is to understand what that gap down value is relative when to buy them when you hit resistance. And the more that goes down, the higher the prices and the puts are going up on the opening bell. 55.70, $19 low. I got a bid of 21.20 by 21.80. I've got a 4 minute tick in these deflated Netflix. This is a 1 minute chart behind me, folks. And you can clearly see on that 1 minute sell gap from these highs up here. The high was 389.16. That's what it was. And at that point in time, we can clearly see that that reversal value within the first 5 minute tape is that people are selling down to 381. We can see that was a clear and precise $8 reversal in the first 5 minutes of Netflix with that put option hitting that wholesale price and then coming up to the value of 24.85 by 25.90. That's at 395. We're still correcting there. When we take a look at that 390 put, we know that was $19 on the low. No one's printed above the high yet. Only volume was 1922.70. I could sell them right now. They're a dollar wide, 70, 22.75, 23.70. Now, when you're in these things, you simply want to come out. You got to learn how to work the exit in the bid and ask range. Now, buying the puts were all based on that opening bell sell gap, and that's what happens. Now, you have to know when to come out of them. Once this stops going down in value, you will have to sell out of these and take your profit, because that means when it bounces and goes up, the values here will come down. This is all live on the opening print, 6 minutes in the bid and ask. Learn how to buy a deep-legged put based on a super earnings gap in volatility. What does that? So it looks like we had a $10 gap right back down here to 379. Isn't that something? But it's the truth. The low, 378.80. We were short this thing last night in after hours at 377 and 379, I believe, and somewhere in that neighborhood. I'll have to look it up to make exactly. But now we're coming off, so you have to be out of these. You sell out now. If you don't, we're bouncing. It's time to get long NFLX. It had that opening bell 3-minute reversal, and it all happened in 7 minutes. But you would have to know how to exit these within that bid and ask range. There was a fast trade there. It's only the verifier of the opening 7 minutes of the day. And to find out where the next pricing level will be, MMTs are on standby based on that opening bell print with NFLX. And you can see right now it's bouncing. It's turned off at the bottom.